this fall or this summer before the president called Harold, because I was quite surprised. I think it's sure when I saw that. He said, "Hold on, in fact, I know about it. I think it elevates the importance for having less residents within our own backyard. So I appreciate that.
Sorry, and I realized I was off camera. They're off like the whole time.
I see them nodding their heads this way, so I think they'll be on that. But thank you, Mr. Oliver. Anything else? I'll go to the confirming bylaw for the Board of Health. Moved by Brunton, seconded by Black, that the bylaw 2708 BH, being a bylaw to confirm the proceedings of the Board of Health for the Haldeman Norfolk Health Unit at this Board of Health meeting held on the 22nd day of August 2017. Discussion. Those in favor? Carried. That concludes our business today for the Board of Health. Thank you, Dr. Locke, and thank you, staff. Oh, there it is. I knew it was here. Okay, we'll get to our council agenda for today's council meeting. I would like to welcome our guests here for our council meeting this afternoon. And again, if you have a cell phone with you, if you can just make sure it's silent so it doesn't disrupt the meeting, that would be appreciated. I want to also point out that next week is Tuesday is the 29th of August. There is no meeting in this chamber next week. We will reconvene as council committee on September the 5th, which will be the day after Labor Day. So I just want to make that note for the public. Approval of the agenda for this evening. Thank you. There is one item to be added to the agenda this evening. It's proposed that we add the county manager's memo, an update on recruitment for the general manager of EBS, that's Employee Business Services, and that will be, if approved, item 19C, and it will be dealt with later in the meeting. It's been moved by Councillor Sonnenberg, seconded by Councillor Geisens, that the following item be added to the agenda as item 19C. This is, as I mentioned, County Manager's memo on the GM of EBS recruitment update, and this is pursuant to sections 239B and D of the Municipal Act 2001, as amended, as the subject matter pertains to personnel matters about an identifiable individual, including municipal or local board employees, and it's a matter of labor relations or employee negotiations. Any discussion on that motion to add this item? Those in favor? It's carried. Thank you. So that will be added. That's all we have for additions. Yeah. Are there any declarations of pecuniary interest to declare at this time, council members? Now you will note item 4 are consent items. Consent items are requests from groups and individuals for permission to do certain things from this council, and we have a number of consent items, as you can see. And if no council members wish to pull any one or some of these for discussion, we will proceed to approve them all with one motion. Do you need a mover and seconder to deal with them all, or are you going to deal just with that? Okay, that's it. Thank you. So, as you can see on item 4, there are items A to K. That should be 11 items there. Is there anything you wish to raise a question before we get to the motion? Councillor Oliver, please.
Mr. Mayor.
That's fine.
Just for clarification, item K is actually not a consent item, is it? It's a staff report relating to the infrastructure program. So I'm wondering if that really should be included in the motion, because we're going to deal with it separately and have recommendations separately. Perhaps staff could clarify.
Andrew,
for me.
yeah, we'll get a clarification.
I see James has his hand up, but just to provide a little bit of a background, it doesn't necessarily need to be something, it can have a recommendation and still be considered a consent item. It's based upon what's in the report and whether or not there will be any discussion really required around it. But it's obviously council's ability to pull any item from this consent, and we'll deal with it under discussion items if that's so the desire.
I'm reminded by the clerk, Mr. Mayor, that we were going to take this new approach, and obviously I certainly am not going to ask to discuss it separately. You've clarified why it's included, so thank you.
Yes. Councillor Brunton and then Columbus.
Thank you, Mayor Luke. My question, I'm not sure if James or Lee can answer it, but with the same report, FS 17-37, I'm on page 29 of our agenda, and I'm wondering, the Waterford Waste Treatment Facility, the way I look at this, is that figure now what we're going to be dealing with, around 12 million, 11.8? Is that the, can somebody answer that?
Yes, Ms. Robinson will answer your question.
Lee, I'm sorry.
No problem. Through the mayor to council, that is the eligible costs that were submitted. We're still hopeful that we can bring that number down below that, but we're still waiting for just the final approval from the ministry before we tender the project.
So do you have an estimate that currently we're working with? Is there a figure in the capital budget?
This is the figure from the capital budget that's eligible for that. We're hopeful that we can bring it in under that, and through through this program, we get up to $2 million. So every penny that we save in terms of bringing the project down doesn't reduce the amount of money that we're going to receive. It just means less that the ratepayers will have to be paying.
So if it's around 12, I assume we're looking at 10 million in debentures to go against the water and sewer budget. Is that the way I look at it? Thank you.
Thank you very much. Councillor Columbus, please.
Thank you, Mr. Mayor. It's page 7 of the agenda, the 300 and some pages. It's Tanya Van Roy. I wonder if we could get more information with respect to what this for-profit designation is all about.
Mr. Clerk, can you give us any detail on Love Thy Laborer request is?
Through you, Mr. Mayor, this is an event in its second year to recognize the work of seasonal workers who come to our community. So normally it's based in Simcoe, I understand, and they have a band and music, and it occurs through the evening.
Go ahead.
Through you, Mr. Mayor, I'm not sure. I don't think Ms. Van Roy has her, to be considered non-for-profit, you have to have your non-for-profit designation or charitable designation. So it may just be that she's new to this, that she doesn't have those yet.
Anything else? Councillor Black, my recollection, this was the celebration on Kent Street last year? Yes. Okay. Anything else on these 11 items of information? Moved by Councillor Sonnenberg and seconded by Councillor Geisens that we do approve these consent items A through K, approve them as recommended. All those in favor? Carried. We're doing closed session. Go ahead. Yeah, I think that would be great. Thank you. Mr. O'Donnell, you obviously have some pull with our clerk. He is pushing me to get you to the microphone and get you out of here. So I think we're going to proceed, if the council has no objections, by going to item number 7. This is the 2016 audited financial statements. On page 49, you'll see the staff report. I'll turn that over to you, James. That's FS 17-27, and these are the 2016 consolidated financial statements. So if you would turn, council, please, to page 49. Mr. Johnson, please.
Thank you, Mr. Mayor. So, Mr. Mayor and members of council, finance staff have completed the 2016 year-end process, prepared the necessary working papers, and have reviewed the 2016 consolidated financial statements with our auditors. I would like to thank Amy Fanning for her help in preparing the report, Kathy LaPlante for her help with the variance analysis, and of course our audit firm, Millards, for their help and guidance throughout this process. We have introduced 3 new tables in this report that we've never had before in order to provide more financial information to council. Table 1 is a summary of the major asset additions that have occurred in 2016. And Table 2 is a breakdown of the PSAB deficit converted to the budgeted deficit. And finally, Table 3 provides a top 10 list of reasons for our tax operating deficit. Jeff O'Donnell will be presenting the 2016 financial statements and will walk through the numbers, including any significant swings from 15 to 16. Year-over-year actuals are an important discussion to have, as it identifies major items so we can have an accounting knowledge of Norfolk County. An example of this would be an increase in leasing costs from 2015 to 16 due to our new RAB building. However, Mr. O'Donnell's presentation does not identify variances from budget. This is the reason why we have included the top 10 list as mentioned earlier, to introduce a high-level variance communication to council. Also, finance is planning to have more comprehensive variance reporting in the future. In 2016, our tax receivables continue to decline. There is a comprehensive analysis on this on the information package today. This is a good news story. However, our reserve balances also continue to decline and contributed to some of the deficits through the investment income. Council's decision to increase reserve contributions for the 2018 operating budget will definitely improve these balances. The tax operation budget variance was close to $3 million. This is a large number and is the reason for the additional information that we're providing today. However, to put this in context for a corporation our size, this deficit is less than 2% of our expenses and less than 5%, 3.25% to be exact, of our tax levy. Some would say that this is break even. However, as your treasurer, I felt an explanation of the variance was warranted. Please note that the deficit will need to be balanced from our contingency reserve for 2016. I will now pass the mic over to Mr. O'Donnell for his presentation of the Norfolk County's 2016 audited financial statements.
Thank you, Mr. Johnson, and council will begin on page 61 in your agenda. Mr. O'Donnell, always a pleasure to have you here. Welcome, and if you want to just push that button under the talk button, and we'll see what you have to say, sir. Thank you.
You did that for me last year. Or this year. Yes, thank you. Thanks for putting me on first. I'll try not to take that get me out of here as quick as you can personally, but
Oh, no.
no. So thank you for allowing me to present these 2016 audited statements. The Treasurer's report gives a detailed analysis of the statement. My goal is to give a fairly high-level overview with some specific references to some of the pages. If you go into page 2 on the bottom right corner of your report, and I don't know if it's every other side, just look for a 2 in the bottom right corner. It is entitled Our Independent Auditor's Report. This is our page. And the second paragraph from the bottom gives you our unqualified opinion that we think the statements present fairly the financial position and the results of the county for 2016. If you go in one page further to page 3, you will see a report signed by the county manager and the treasurer taking management's responsibility for the financial statements. As you recall, 2015 statements were the first ones prepared using the county's new IT accounting system. The conversion caused some delays in the 15 statements completion. The 16 process still had some glitches, but we made significant progress in the year-end process, and I'm pleased with the direction and philosophy that James and his crew are taking and I think council will too over the long haul. Page 5, if you'll turn to that, it summarizes the consolidated revenue and expenses for the county, which includes the operating and the capital fund activity for the year. They're presented with prior year actual figures, as well as council's approved operating and capital budgets. These budget figures that you see, we don't audit them, and they do include amortization of tangible capital assets, or TCA. They exclude TCA purchases, debt repayments, new debt issued, and also reserve fund inflows to cover any deficiencies. That's why these statements on the budget side show a budgeted deficit of about $4.5 million. Note 17 on page 21 does adjust for those, as it shows a balanced cash flow that council approved. The new PSAB standards have still added a layer of complexity to the year-end reporting. They're fairly new. They were brought in 2009, and I think the accounting profession as a whole still has a ways to go in explaining their meaning to users. But as for the numbers, if you'd refer to page 5 on our statements, and also at the bottom of page 5 of the Treasurer's report, we'll go through these numbers in a summary fashion. Total revenue for 2016 for the county, 178,000 or 178 million rounded versus 173 last year, an increase of about $5 million. Taxation, about 79 million versus 74 last year, an increase of about 4 million or about 5%. Federal government transfers, if you look at page 19, note 11, which I don't think you need to, you'll see the breakdown of federal revenue, and federal gas tax approved projects for 16 were about $4 million less than those projects completed in 15. To be clear on that, the county did receive and deposit all our entitled share to the gas tax money similar to 15. It's just that the projects approved for those spending were less in 16 than in 15. Your gas tax revenue received and not applied yet was about $3.8 million in 2016. It was about $3.7 million in 2015. So it's all here, it's all in the bank. It's just the projects that were entitled to spend those on. There weren't as many in 16 as there were in 15. Government provincial transfers is also on that same page and note, and it breaks down the provincial revenue. You're seeing an increase of about $4 million in provincial transfers. About $2 million of that was for infrastructure funding, and about $2 million more for social services funding, which also explains the significant increase in those two line items in the expenses. On the expenditure side, $179 million rounded versus $171 last year, about an $8 million increase. Again, if you'll refer to the Treasurer's report on page 6, it does give the reasons for the increases compared to the actual. Transportation services increasing about $1.7 million from 15. There's a $500,000 increase in resurfacing, repair, and maintenance costs compared to the prior year. A $700,000 increase in the RAB building lease for a full year versus a part year last year, and about a $500,000 increase in amortization in those numbers for TCA assets added in prior years. Environmental services are up about $3 million from the prior year. The soil remediation project at the county garage and in front of the OPP building added about $2.5 million to those costs. It's the first full year of the county's new solid waste collection practices, which is increased over last year. Planning and development costs have also increased about $700,000, and that's for some increased ash tree removal during the year and some environmental grants that were distributed to that department. All in all, you're seeing a $5 million increase in revenue, an $8 million increase in expenses. That's going to cause a swing compared to last year of about $3 million. We had an actual surplus in 15 of about $2 million and a bracket of about $1 million for 2016. If you go back one page to page number 4 in the bottom right corner, this is your statement of financial position, and it summarized the county's consolidated assets, liabilities, and accumulated surplus. And again, if you'll refer to the Treasurer's Report, page 3 and 4, while we speak to these statements, it'll probably make it easier for me to explain and for you to catch up. Financial assets, 105 million versus 109, a decrease of about 4. If you look at where we got our money from and where we spent it, our operations, including amortization, brought in about $28 million of cash to the organization. However, we went out and spent $28 million on TCA additions and another $4 million on debt repayment. So we brought in 28, spent about 32, so we're down about 4 in total. That's the significant increase or decrease in your financial assets. Taxes receivable, a small increase, but as James mentioned, the trend is favorable. Your percentage of outstanding taxes as a percentage of your total levy is down. You have less older taxes outstanding than you used to, so it's all good. It's trending in the right direction. Liabilities, you're up about $2 million in total. Deferred revenue is the biggest increase, 22 million versus 16 million, an increase of 6. Most of that, or part of that, is your gas tax revenue. It's been parked in deferred liabilities until you spend it on approved assets. So it's not a liability that you'll ever pay out. I would look at it more as a reserve fund for council than something you're going to have to pay out to somebody. Developer charges also increased by about $2 million, and those will be brought into income as those development charges are spent on what they are gathered for. Non-financial assets, the biggest increase is in the tangible capital asset line, 549 versus 545 million, an increase of about $5 million. There is a table with the Treasurer's Report that shows a summary of about $28 million of capital asset purchases. We amortized those by 23 million for a net increase of about 5 million. Accumulated surplus is the last item on that page. It has gone from 544 to 543, a decrease of about $1 million, which was the consolidated loss that we just went over on page 5. If you do want to look at page 18, it does give you a summary of where our accumulated surplus has been allocated. Page 18 in the bottom right corner. The biggest investment of our accumulated surplus is in the net tangible capital assets, 474 versus 470. So it's up about 4 from last year. The operating surplus water and wastewater surplus, if you add those together, it's about $1.8 million bracket. Last year it was an $839,000 positive figure. Reserves has a bracket of 7.5 million compared to a bracket of about $1.7 million in 2015. So it has gone the wrong way to the tune of about $6 million. Reserve funds is up about $3.6 million, 96 million from 93. The largest increases is in your capital, water, and sewer replacement reserves, totaling about $21 million if you add those two lines together versus 17 last year, so it's up about 4, headed in the right direction. So all things considered, a reasonable year for Norfolk with some listed reasons for an operating loss in the Treasurer's Report. We still have manageable debt loads currently, but not without some continued stresses on our reserve funds. So I was pleased when I read the report from Finance on the reserve fund activity, and I wish you good luck in funding that. So if there are any questions for myself or James or Amy, now's the time.
Thank you very much, Mr. O'Donnell. As always, a good report and a good presentation. And I'm going to start with Councillor Brunton for questions.
Thank you, Mayor Luke. I do have one question for Jeff, but I have some questions on the report from James. How do we deal with that? Do you want to deal with Jeff first, or?
No, I think we'll just do this. It's all on the table. We've got the staff report. We've got, so I'll entertain questions to either one. If that's okay with you, it's okay with me.
Yeah, that's fine with me.
Yeah, thank you. Because
Just, Jeff, you touched on the tangible capital assets there of 549 million. How do you arrive at that figure? How do you, like, I know there's a lot of things in there to include. How accurate are some of those?
Well, back in 2009, if we can go back that far, we had none on the books. So we had to go back in time and capitalize everything that had previously been just recorded as an expenditure.
Yeah.
In some cases, there were cost records when they were recent, but in some cases there weren't. So we had to hire engineering studies to say, what would that have cost back then? And we're going to put it on the books at that price now. From there on, it's cost. Anything that you do to add a road or a fire truck or a building, it's the costs that go into it, the actual invoice paid cost.
So, bridges or a road job that was done sometime before 2009, what would be, like, would they be included in that?
Yes.
So you come up with a value,
Yes,
and then you depreciate them?
yes, over its estimated useful life.
Okay. Okay, that's my only question on that part of the, I kind of wondered how you arrived at that figure, but I'm going back on page, in the report, if I may, to James, and you talk about our reserve funds. And, get this straight here, find my page. Well, I'll go to page 51 in our agenda, and I think it's not on the reserve. Did the reserve fund drop from 48 million down to 20 million, I believe?
This past year?
Well, the 19 million for 2016 came off in 2017, am I correct? 19 million? There we are, yeah. Page 51. There was no new debt issued in 2016, but the 19 million will come out in 2017.
That's correct.
So whatever we do in 2017 will come out in 2018. It's
No,
a year behind, correct?
We're 16 year end, which is December. The
Right.
debt you issued was in the spring, I think, of 17 and more to follow.
But it did apply to 2016's work,
Probably approved back in 16 for
correct?
new debt.
James?
Through you, Mr. Mayor, yes, that new debt was approved in 2016. However, we didn't receive it until March of 2017.
Okay. Just under there, the accounts receivable have increased slightly year over year. What other accounts receivable other than taxes? Like, I know there's a lot of revenue from our sports facilities.
User fees, yeah,
Yeah,
user fees.
User fees. Are they not being paid on time or not being paid at all?
Through you, Mr. Mayor, the majority of that balance actually is accounts receivable related to health and social services. There's a lot of grants that we anticipate to receive, and therefore we set up the AR for it. As far as collectability, I do not know of any significant collection issues with our regular AR, like you said, through arena fees and things of that nature. However, we do plan on doing a regular review of collection issues so to make sure that we do collect them. But I'm not aware through our tax and revenue division that there are any significant collection issues.
Well, for me, Mayor Luke, I know we pass user fees, I think around 11 million per year in that figure. Of that 11 million, are a lot of that, what would be the percentage of non-recoverable? Can you give me an idea? Isn't that what we're talking about in that line? You say it's gone up, the accounts receivable have gone up, so I assume you mean they haven't been paid. Am I reading that right?
Through you, Mr. Mayor, correct. It hasn't been paid, but we are expecting payment. It's just a timing issue. This is as of December 31st, 2016. So the bulk of that line item was received probably within the first 3 or 4 months of the following year. So it's a timing issue of why that dollar amount is there for 2016.
But are you carrying any year to year that aren't, I know of a few that, and I won't mention the names that we know are in default, if I could use that word. But can you give me an idea of, say, of our user fees, what percentage of that is recoverable of what 11 million? What percentage roughly? Is there a percentage that is not being recovered?
Through you, Mr. Mayor, I don't have a percentage for you today. However, of that $11 million, the bulk of that is the water and wastewater user fees. So, and then that's handled through Earth in order to do collection through there. And I can tell you with that, we write off about $100,000 a year. However, when it comes to the other types of user fees that we have in our user fee bylaw, I would have to do further investigation to determine if we have any major collection issues.
That figure, Doug, or Councillor Brunton, is net of any allowance for doubtful accounts. There's a reserve in there for doubtful collections.
Right.
We feel that 11 million is in the ballpark of what is actually collectible.
That
There
is
is-
collectible.
Yeah, that would be net of what we think isn't. There's an allowance for doubtful accounts in the records as well. So that 11 is, in our opinion,
So you can provide that, James, at a later date, possibly? Like, I know of accounts that aren't being paid. We've discussed some of that, and I just wonder how long they go before you write them off.
Through you, Mr. Mayor, well, for the water, wastewater
Right.
amounts, that was identified in, I believe, 2 previous reports when we talked about water and sewer arrears. So I would have to, I don't have that off the top of my head. But yeah, let me figure out what our priorities are for the next few months, and then I can
Okay.
determine whether we can bring a report to council.
That's fair. And my last question, if I may, Mayor Luke, is on page 60. I just wanted to get this straight here. Right at the top of the page, in 2009, we had $48 million in reserve and reserve funds, correct? And it's now at 20.7 million? That's it?
that would be net. That's excluding the legacy fund,
Excluding, yeah.
excluding, yep.
Which isn't good?
That depends on what you're going to do with it down the road.
Well,
You-
we just said we ventured 19 million this year that will show up next, or last year that shows up in 2017.
17 statements, yep.
That's a lot of money. That's about all of it, is it not? The 20.7 million?
Well, that's new debt,
Right.
right? It
Not
doesn't
all,
hit,
yeah, not all reserves. but
it
it's
doesn't hit
still-
that reserve at all. That's
It's more debt.
more debt,
Thank you.
yeah.
Councillor Columbus, please.
Thank you, Mr. Mayor. Question for James, and it's with respect to Table 1, page 52 of the agenda. And James, it says infrastructure cost for 2016, Argyle Avenue reconstruction. I take it that's the one in Delhi. And it's listed at $5 million. Now, this project occurred over 3 phases, like it was a 3 or 4 year project. So I'm wondering, why is $5 million allocated to the reconstruction when it actually was done over several phases?
Through you, Mr. Mayor, that $5 million amount represents the dollar amount that we brought into assets for 2016. So if that differs from other figures, it could be we brought some of it in as an asset either the year before, or there might be part of that project still outstanding.
Councillor Oliver, please.
Thank you, Mr. Mayor. My question, and it's as much a comment as a question, is to Jeff, our auditor, and it's on page 20 of the audit report. Jeff, and I wonder if you would just sort of make a comment on the item C, which is our Ontario Provincial Police contract. I think your notes indicate that the cost in 2016 was down from the year before.
Mhm.
I don't recall in previous, I know we're operating under the new funding formula with the OPP, and Mayor Luke and I sit on the board currently. Do you think we can continue to expect a downward trend as we fully implement that new funding formula, or this is a good news story, but I don't recall whether this will be the last year that's likely to happen and it'll start trending back up again, or whether you've got any indication at all as to if that is as a result of cost containment or just the new funding formula at this point.
I think James, when his eyebrows went up when he looked at me, I think he's got the answer for us. We don't get that deep into it in the audit.
Through you, Mr. Mayor, the OPP contract is it's always undergoing different methods of allocating the costs across the province. We are involved in a committee now, an Ontario-wide committee of all the municipalities that use their services to go over some potential changes to the funding formula. For example, they use assessment for a lot of the allocation, and they want to turn it into more of a population base or vice versa. Those are examples of some items that are coming down the pipe. So as far as to answer your question, Councillor Oliver, I'm not sure what that will do to Norfolk County. I know in 2015, when they last redid the funding formula, we did benefit from it, as you can see with this note. However, going forward, I'm not sure where that'll lead us.
Okay, thank you. Councillor Height, please. Thanks.
Thank you, Mayor Duke. Through you to the deputation, I have a few questions going over this. It's not that rosy of a picture, but we touched earlier on about some debt. Now it says here that on page 59 of our agenda that we have 27 million in capital that is unfinanced. That means we have more debt that we need to issue. But on page 79, it says that we have $30 million in capital that we require. Now, does that include the $19 million of debentures we just issued in February? Or is that on top of that?
I don't have that answer.
No, James, I'm wondering if you have it there.
Through you, Mr. Mayor, could you repeat the question, Councillor Height, please?
Sure, I'm looking here, page 59 of our agenda. It says 27 million, negative 27 million in capital. Or unfinanced capital, sorry. It's negative 29 million, almost 30 million on page 18 of the auditor's report, 79 of our agenda. Okay, but page 59 states it differently. Give me one sec, let me get to there. Page 59 in the first column of your report, comments on the 2016 consolidated financial statements says 29.9. No, I guess that is right. They're both at 30 million. So, but does that include the $19 million worth of debt that we issued in February? Does that clear that up, or is that on top of that?
Through you, Mr. Mayor, that 29.9 million figure represents open capital projects that haven't been financed yet. So the debt that we issued in 2016 that we received in 17 would represent a number of those projects. I'm just trying to think off the top of my head. I believe one of them was the wastewater facility being built. So there was a significant chunk of it going towards one project. So once it's closed, it should bring that down.
Okay, thank you. Now, on page 76 of the report, it gives you a list of the long-term liabilities, and basically it's your payments from issuing all that long-term debt. Now, in 2020, well, from 2019 to 2020, we're going to jump from $4.5 million per year in payments to $13 million per year. That's a problem. We kicked that can down the road because that was supposed to come up in 2018 by refinancing that debt. Will we be kicking this one as well? I'm sure we have to. But I know, I know we did this recently, and to continually do this isn't the right thing to do.
Through you, Mr. Mayor, in the 2020 figure would include, I believe, a balloon payment for some debt that was issued prior to that, and that's depending on what I'd have to look up exactly what that balloon payment was for which debt issue that we did. However, that isn't uncommon in order to get more competitive rates to have a balloon payment at the end of the debt issue.
Okay, so where does the money come to pay for the balloon?
Well, through you, Mr. Chair, Mr. Mayor, we would obviously at that point in time, we would look at our reserve situation, or you're correct, we may have to issue debt at that point in order to smooth it out.
Isn't that similar to refinancing your house to pay off your credit card debts over and over and over again?
With the balloon payment, that debt would, you're talking about paying off one debt with another debt. With a balloon payment, that debt would cease. It would be the end of the term. And then at that point, we would have to take a look at our financial situation to determine, do we issue more debt? We have to look at the rates versus our healthy reserve balances by that time. Perhaps we could to use that to, or a combination of both. But at the end of the day, we would have to look at our financial situation at that point in time.
Okay, thank you. On page 72 of the report here, it talks about GICs that the county had. And if you go from 2015 to 2016, we're down about 10 million. So we went roughly from $17 million down to $7 million. So was that spent for operating?
Through you, Mr. Mayor, in 2016, we closed a lot of capital projects, a lot more than 2015. So therefore, we used a lot of our cash in 2016. And because of that, you see our reserve balances depleting, and we're not contributing to the reserves in order to offset it. So therefore, finance staff that deals with cash in order to invest the GICs, as you stated, had less than half the amount to work with in 2016 than we did in 2015. And so therefore, as you can see in Table 3, one of the reasons for our deficit was we didn't earn as much investment income because of that lack of cash to use for those investments. A smaller part of it is the average return for those short-term investments reduced as well from about 1.9 to 2% down to 1.7%.
Okay, thank you. I guess it is hard to get investments when you're spending them. It's hard to get interest on nothing, right? And when I read your report, Mr. Treasurer, you're suggesting we're going to make up this deficit of 1.8 million by taking it from a reserve account that has 4.4 million in it. There's only so many times that we can keep going back to that well, and by the looks of it, there's 1.5 more times. That reserve report you brought to us, do you think it'll address this, or should we be looking at operating efficiencies to reduce our overall expenditures?
Through you, Mr. Mayor, in the reserve report we did in July, there was a reserve amount that we were recommending be transferred to the contingency reserve. So yes, the balance today is 4 million, but we were going to add another 2.5 million to it. However, with our deficit, that's pretty much being reduced down to our original $4 million mark. But you are correct. If we run a deficit, we have to fund it from the contingency reserve by law. And as far as your last question, I believe we are having a report coming to council with some budget improvements as far as presentation coming in September or October, and then we are having a meeting in November to talk about our economic challenges that we have for the 2018 budget.
Okay, thank you. My last one here is drilling down a little deeper, and that's page 7 of the staff report. It mentions that the Planning and Development Department was being billed for ash removal. Isn't that a DCS or a CSD department?
Through you, Mr. Mayor, that's the category that's used with our financial statements as well as our financial information return that we have to provide to the province. So the categories you see in the financial statements where it says general government, environmental services, and transportation services, those are standard categories that we have to use when we report to the province or when we publish financial statements. So under the planning, yes, it does group DCS and some other areas within Norfolk that are perhaps categorized a little bit differently than what we have to report.
Okay, so then if I go to page 66 and I see Planning and Development had a budget of $3.4 million and their actuals was $4 million, that's a problem.
Through you, Mr. Mayor, yes, as we identified, The reason for that variance is the CIP program wasn't budgeted for in 2016, and I believe that we spent about $190,000 on that, and then the bulk of the rest of it is for the ash borer beetle program that we encompassed.
Okay, thank you.
Thank you very much. Councillor Black, please.
Mayor Luke, thank you very much. Through you to Jeff. Jeff, seen you here for quite a number of years now. So you should have a good idea of the financial health of Norfolk County compared to previous years. And I'm just wondering if, not a detailed question, but just a general question on the financial health of Norfolk County. What kind of financial health would you how would you categorize Norfolk County's financial health in terms of previous years? You don't like that question?
It's one I didn't anticipate.
Oh.
I guess if I see anything, it would be in the reserve fund area. We haven't been adding enough to it. You're talking about debt. We haven't done that as much in the past as we could have because we're taking from there. We're also not including in our general tax rates enough to either fund what we're doing capital-wise or save for a rainy day in the reserves. We've just been eating away at that slowly but surely. So it's that area of the balance sheet that I would say has probably been, as James's table indicates, we've eroded that to a point where some of them are in a negative. You can't take from what you don't have. Our bracket just keeps getting bigger, and we just apply necessary funding needs from there. So I don't think the financial shape of Norfolk County is in dire straits because I think our debt loads are manageable compared to other municipalities and compared to what we're able to borrow. But I do see that as our Achilles heel. We're just not charging enough in our rates to pay for the capital expenses that we're incurring right now and beyond.
Appreciate that. And secondly, we often get I think once or twice a year we hear from the treasurer about Standards and Poor's rating. And really, how much, when I see it, you know, for the last couple of years, it's been pretty stable, and then prior to that, it's actually been going up. So, like, we have a pretty good rating. So how does that Standards and Poor's rating plug into the financial health of Norfolk County? Is it, to me, it looks good, or am I being fooled?
Yeah, what's your bond rating?
Through you, Mr. Mayor, our bond rating is AA negative stable. It's been like that since 2015. However, what makes it stable is a number of factors. We do have the legacy fund there, which has helped tremendously to get that rating. We also, as Mr. O'Donnell mentioned, our debt is at a manageable level. However, with the latest study that was done, and I believe I mentioned it when we presented the report, they cautioned us on continuing the same path, whereas our reserves are depleting and our debt is increasing. So personally, I was actually pleased that our rating stayed the same. Finance staff were expecting a decrease in our rating, judging by the initial meetings we had with Standard & Poor's, but it worked out that we were able to pull off the same rating as last year.
Thanks, I appreciate that. I don't know if, Jeff, you want to make any comments on that, or does that seem adequate?
No, they're the experts, and I do think the $70 million in the legacy fund did add a dimension of rating that wasn't there before.
Okay.
And I think they like that.
Okay, well, I guess I'm hearing you loud and clear about the reserves, and I think you've been telling us that for a while now, and we are making an attempt to move forward on that.
Any further questions for either our finance department or Mr. O'Donnell? Thank you very much, Jeff. It's always a pleasure to have you here. Good job.
Thank you.
Thank you. Two motions to come from our discussion. The first one is Councillor Geisens has moved, Councillor Sonnenberg has seconded that staff report FS 17-27. This is the 2016 Consolidated Financial Statements report. We do receive this as information. Any discussion? Those in favor? It's carried. Moved by Councillor Sonnenberg, seconded by Councillor Geisens, that council receive the 2016 audited financial statements for information. Any discussion on that part of the agenda? If not, those in favor? Those opposed? It's carried. Thank you. I know we started at 2 o'clock and some of you might want to break. I have a suggestion. I know I'm not the sharpest knife in the drawer, but I have a feeling that many of the people here sitting quietly and patiently in the audience are here due to the council and committee meetings of last week. I think it would be wise at this time to go forward to that part of the agenda, and again, that's with council's permission, and deal with the council and committee meeting minutes of August the 15th, last week. It's on page 109. If there's no objection, I think it's good to be flexible and reward these folks for sitting patiently. Any objection to moving forward, deal with that, then we'll have a quick break. I see no objection. Let's go to page 109, please. These are the council and committee meeting minutes from last week. Separate ones there. Thank you, sir. It's been moved by Councillor Columbus and seconded by Councillor Geisens that both the open and closed session minutes of the council and committee meeting of August 15th, 2017 be approved as presented with the exception of recommendations number 8, number 9, and number 10, and they are pulled for further discussion. Any discussion on this motion? Approval of last week's minutes, except for 8, 9, and 10. Those in favor? It's carried. Thank you. Yes?
I know we're going to be dealing with these three again. I wondered if you could indulge me a little bit procedurally. It may be slightly complicated because there are some different options on how to proceed with this after listening to council's concerns, possibly of money, of public input. I mean, there could be the option of deferral to allow these people to come forward at another meeting to speak, or there could be the option of looking at number 8, resolution 8, and possibly approving that, amending it to ask staff to lower it. So I'm not sure how to proceed procedurally rather than just dealing directly with 8, 9, and 10. I don't know if you could help me out or the clerk could.
Well, I think we can help you out. Normally, under this situation, we would proceed with a motion to deal with 8, to put it on the floor if I got a mover or seconder. Then it can be debated procedurally, correct? Help me here, right?
Through you, Mr. Mayor, yes, I guess the process is to put forward a motion, number 8, and put it on the floor and debate it.
Thank you, Mr. Clerk. And so at the moment, I have no motion on the floor. I will entertain any motion at this time because I don't have a motion. I'm well aware that of what's written here from last week. However, a move and second motion to deal with these 3 items is perfectly in order. Fair enough? The boss has spoken. Councillor Black, please, we'll start with you.
Well, if that's the case,
Oh,
Then-
Counselor Black, the reason I say that is normally we have a mover and seconder to proceed with the resolutions that were pulled. We don't, so there is no motion. If there was, I would obviously be entertaining that. That would be procedure, but I don't have
Okay.
a
Well,
mover seconder, so you have the floor.
yeah, I wonder if we could try putting back number 8 again, but modified, and modified to reduce the amount by, I think around $20,000. Now, where I get that figure from is in discussions with staff, myself, to see if it was a possibility to renegotiate the RFP down from its current amount to a lower amount. And that would be the motion that I would like to try. But I would also, before doing that, like to ask staff if that is possible, whether it's Todd or our county manager.
Well, I know your intent is to perhaps revise Resolution 8, so the 98 then would look like perhaps 78, and obviously the 48 from the levy would become 28. I'm going to ask staff for clarification simply because this motion does relate to a tender, I guess an RFP that has been received, has been recommended by staff, and of course was not accepted by council, so obviously. So, Mr. County Manager, I'll look for your direction from staff as to what we can do and what we can't do as far as our tendering, keeping in mind the tendering process. Thank you. Yes, Councilor Geisens? We don't have a motion proposed. We have a question as to whether we can proceed that way. So it's really clarification. I'm going to allow to get some clarification, and I think if the answer is we could go that way, then I would look for a mover and seconder, then we'd be on to a discussion. Do you wish to comment just in procedure?
The good news here is that council has a number of options available to it with respect to the RFP process. A couple of salient points to make. There was the original estimation at $50,000, I am told, I wasn't employed here at the time, came as a result of a discussion pertaining to how to use monies from the legacy fund. And at the time, it was sort of a guesstimate without a lot of analysis underneath it that perhaps $50,000 would be adequate to obtain these services. As it turns out, $50,000 is woefully inadequate to obtain these services. 98,000, we had roughly 20 organizations inquired, made inquiries and asked questions, and ultimately we had a number of bids, less than 20, but this was the lowest of them, which was roughly double what the unsupported analysis suggested. So, with that in mind, based on the RFP as issued, $98,000 is the best price that could be obtained on the open market. Council could instruct staff it is possible to attempt to cut down the scope of the RFP if there are specific things you're no longer interested in having the consultant do, but it would be incumbent upon council to indicate to staff what those things are you no longer wish to bargain for, because what we can't do is say, well, $98,000 is the lowest price and I'd just like to negotiate you down. This, through a fair process, came to this price. You could instruct us to, we could cancel the RFP and institute another one with different requirements, a different scope, perhaps a smaller scope, and that may well get different price points, much like buying a different car, a different automobile with fewer options and a different model, perhaps. So we could, it is possible to negotiate down scope after the fact. It's less clean, though, than canceling the RFP and starting again. Or, of course, council can consider whether our original, and I'm sorry, I wasn't here at the time when we came up with the $50,000 figure. I think there was, it was a little bit off the fly if I read through documents correctly. But frankly, that may just have been an inaccurate estimate, and as it turns out, the approximate price for work of this scope and scale is in the $100,000 range. So those are at least three options.